Let's cut through the myths about wealth. For years we've been told that becoming a millionaire is only for the lucky few, those born into money or people who strike it rich overnight. But the reality is far less glamorous and far more achievable than you might think. Most millionaires aren't lottery winners or high earners. They're ordinary people who built wealth through patience and discipline. They're teachers, nurses, small business owners, and people who simply made smart choices over time. They didn't wait for a windfall. They created their own opportunities, one decision at a time. The real secret? Consistency. Small, regular actions matter more than big, risky moves. It's not about making a single, life-changing investment, but about building habits, like saving a little from every paycheck or investing a set amount each month. Over time, these habits compound, just like interest does. You don't need a huge salary. You need to make your money work for you. Even if you start with modest means, what matters most is how you manage what you have. Tracking your spending, setting goals, and making intentional choices can have a bigger impact than earning a six-figure income and spending it all. Saving is for emergencies, but investing is how you grow wealth. An emergency fund is your safety net, but it's not the end of your financial journey. Once you've built that cushion, it's time to put your money to work. By investing in assets that grow over time, like stocks, bonds, or real estate. Money in a savings account loses value to inflation, but investing lets your money grow with the world's biggest companies. While your savings might feel safe, inflation quietly erodes its power. By investing, you give your money a chance to outpace inflation and benefit from the growth of the global economy. Wealth isn't reserved for the elite. It's about starting, sticking with it, and letting time do the heavy lifting. The earlier you begin, the more time your money has to grow. But it's never too late to start. Every small win, every step forward adds up over the years. The journey to $1 million doesn't start with a fortune. It starts with a single committed step. Like planting an acorn, your first investment may seem small, but with care and patience, it can grow into something truly life-changing. Decide to begin and keep going. The path to wealth is built on everyday choices, steady progress, and the belief that your future is worth investing in, starting right now. When it comes to building wealth, there's no secret shortcut or magic formula. The real key is consistent investing, making it a habit, not a one-time event. It's about showing up for your future, month after month, and letting time do the heavy lifting. Imagine filling a vase not with a single splash, but with steady drips. Each coin, each small contribution may seem insignificant at first, but over weeks, months, and years, those drips accumulate, eventually filling the vase. That's the power of regular, disciplined investing. The best way to make this work is to automate it. Set up a fixed amount to invest every month, regardless of what's happening in the markets or the news. Treat it like any other essential bill, something you pay without question, rain or shine. By automating your investments, you take emotion out of the equation. No more worrying about whether now is the perfect time to buy or sell. You don't have to second-guess yourself or stress over market headlines. This approach brings peace of mind and keeps you on track. Regular investing also means you benefit from pound cost averaging. When prices dip, your fixed amount buys more shares. When prices rise, you buy fewer. Over time, this helps smooth out the highs and lows, reducing the risk of investing all your money at the wrong moment. Think of the market like a roller coaster, full of ups and downs. Consistent investing turns those wild swings into opportunities, not obstacles. Instead of fearing volatility, you use it to your advantage, steadily building your portfolio through every twist and turn. You don't need a huge lump sum to get started. Even small, manageable amounts can make a big difference over time. What matters most is sticking with it, even when progress feels slow. Remember, consistency and patience are more powerful than trying to time the market or waiting until you have a large sum. The earlier you start, the more time your money has to grow and compound. This approach is accessible to almost everyone, regardless of age or income. Whether you're just starting out or already on your financial journey, consistent investing can help you reach your goals. So let your investments grow quietly in the background while you focus on living your life. Over time, you'll be amazed at how far those small, steady steps can take you. The key to consistency: automation. Make investing as routine as brushing your teeth. Set up a direct debit to move money into your investment account right after payday. Pay yourself first before bills or spending. This way, investing isn't an afterthought, it's a priority. Automating removes willpower from the equation and builds discipline painlessly. You adapt to living on what's left, not scrambling to invest leftovers. Over time, these small automatic steps add up to real wealth. You don't have to think about it, it just happens. The growth habit is about thousands of tiny, automated actions. That's how you build lasting financial security. Let's see the numbers in action. Invest £50 a month, about the cost of a few coffees. Over 30 years you'd put in £18,000, but with 5% annual growth, it could grow to over £41,000. Double it to £100 a month and you could see £83,000. The magic is in compounding. Your returns earn their own returns. Time matters more than the amount you start with. Small, regular sums snowball into something big. Early contributions have the longest to grow. Don't worry if you start small. The most important thing is to start. Let time and consistency do the work. Meet Sarah, a teacher who thought investing was for the wealthy. She started with just £25 a month in a simple global tracker fund. As her salary grew, she increased her contributions bit by bit. She automated her investments and never tried to time the market. 20 years later, her pot is worth over £50,000. No inheritance, no windfall, just small, steady steps. Sarah still enjoyed life, but investing became a non-negotiable habit. Her story proves you don't need to be rich to build wealth. Start small, stay consistent, and let time do the rest. Anyone can follow Sarah's path. The key is simply to begin. Fear of bad timing stops many from investing. People wait for the perfect moment, but timing the market is nearly impossible. Even experts can't predict highs and lows consistently. Most who try end up missing out on growth. Instead, focus on habit. Invest a fixed amount regularly, no matter what. This takes the guesswork out and lets you buy more when prices dip. Time in the market beats timing the market every time. The biggest factor in growth is how long your money is invested. Build a habit, automate it, and let your plan work in the background. That's how you win at investing. Ready to start your growth habit? Here's how. Open a stocks and shares ISA, your tax-free investment basket. Choose a low-cost, beginner-friendly platform online or via app. Don't overthink it, just pick one with low fees and good reviews. For most, a global index tracker fund is the best starting point. It spreads your money across hundreds of top companies worldwide. No need to pick stocks, just track the market. Set up an automatic monthly payment for an amount you can afford. Schedule it for the day after payday. That's it, you're investing. The most important step is simply to begin. Do you ever find yourself lying awake at night, worrying that you don't have enough money to start investing? You're not alone. This is one of the most common concerns people have when thinking about their financial future. The idea of investing can feel intimidating, especially if you're just starting out or if your budget feels tight. But here's the good news. You don't need a fortune to begin. Even starting with as little as £25 a month can set you on the path to building wealth over time. The key is consistency. Making small, regular contributions adds up thanks to the power of compounding. Think of it as planting seeds. Over time, those seeds can grow into something substantial. If you're worried about where to find that extra money, take a close look at your monthly spending. Often there are small expenses like unused subscriptions or frequent takeaways that can be trimmed. Redirecting even a little bit each month can make a big difference in the long run. Remember, it's not about making huge sacrifices, but about making smarter choices with what you already have. Another big worry is risk. It's true. Investing isn't without risk, and the idea of losing money can be scary. But here's what many experienced investors know. Time and diversification are your best friends. By spreading your investments across different companies and countries, you reduce the impact of any single loss. And by staying invested for the long term, you give your money the chance to recover from market ups and downs. History shows that markets tend to recover and grow over time. That's why it's wise to commit to investing for at least 5 years. if not longer. The longer you stay invested, the more you benefit from the market's natural growth and the magic of compounding returns. To make things even safer, consider using a global tracker fund. This type of fund automatically spreads your money across hundreds or even thousands of companies worldwide, helping to cushion you from the ups and downs of any single market or sector. Feeling overwhelmed by all the financial jargon? Don't worry. You don't need to be an expert to get started. Focus on the basics. Use an ISA for tax-free growth, choose a tracker fund for easy diversification, and remember that compounding is your ally for long-term growth. You can always learn more as you go. Maybe you're afraid of making a mistake or picking the wrong investment. That's completely normal. The truth is, everyone feels uncertain at first, but you don't have to get everything perfect from day one. Start by choosing a low-cost investment platform and a global tracker fund. This simple approach is a solid foundation, and you can always adjust your strategy as you learn more and gain confidence. Remember, the only real mistake is not starting at all. Every investor, no matter how successful, began with that very first step. Don't let fear or uncertainty hold you back from building your future. Taking action, even if it's imperfect, is always better than doing nothing. Start where you are, with what you have. Action beats inaction every single time, and you'll learn and grow along the way. So take that first step today. Learn as you go, adjust as needed, and remember, your financial journey is uniquely yours. The most important thing is to begin. Let's recap. Wealth isn't about luck, it's about discipline and consistency. Drip-feeding small amounts into investments builds real wealth over time. Automate your investing and let your money grow while you live your life. Even £50 or £100 a month can become tens of thousands. Sarah's story shows small beginnings lead to big results. Open a stocks and shares ISA, pick a global tracker fund, and automate your payments. You're now an active participant in your financial future. Don't wait for the perfect moment. Start today. Your future self will thank you.